Thank God it's Friday. Welcome to Business Morning on Channels Television. Great to have you join us. I'm Ini, John Mekwa. Well, let's start from the global oil space where futures eased for a second session on Friday on expectations that Washington may soon act to cool prices that remain above $80 per barrel, while movement curbs in China to rein in a COVID-19 outbreak weighed on fuel demand. Brent crude futures fell 6 cents to $84.41 a barrel, while U.S. West Texas Intermediate crude was down 21 cents to $81.91 a barrel. China, the world's second biggest oil consumer, has suspended some international flights and stepped up efforts to rein in a virus outbreak at Tianjin, while Omicron variant has spread to northeastern cities. The world's top oil importer also posted in 2021 its first annual decline in crude oil shipments in 2 decades as Beijing clamped down on the refining sector and drew down massive inventories, although traders expect imports to recover this year. And from there, we come to Nigeria, where Nigeria's economy is expected to grow by 2.5% this year amid concerns over inflation, global oil prices, as well as rising cases of COVID-19. To this end, the Nigerian British Chamber of Commerce organized its quarterly meeting with stakeholders to assess the country's economic outlook. Our correspondent, Will Ibong, was there and filed in this report.
The Nigerian British Chamber of Commerce, which was created to promote trade and investment between both countries, hosts members, policymakers, and business leaders to discuss Nigeria's economic outlook for 2022.
The hidden hand is the most...
The keynote speaker for the event, renowned economist Mr. Bismarck Ruwani, speaks on his expectations for the year.
As we look into 2022, we can say that there will be a debt problem. Exchange rate adjustments will take place, more towards convergence. The crawling peg will happen, and the currency effectively will appreciate, even though nominally it will depreciate in the official market, but it will appreciate in the informal market, bringing us towards convergence.
While some participants at the event raised questions about how realistic the positive forecast for the year is, Mr. Ruwani maintains this can be achieved if certain variables are put in place.
What are the catalysts that will bring about this growth? The catalysts are productivity due to ICT, new investments, right? But even sweating the old investments that were there, the level of gross capital formation, the level of savings. I made these assumptions basically on the fact that I believe that interest rates have to increase.
At the end of the event, the President and Chairman of Council of the Nigerian British Chamber of Commerce, Mrs. Bisi Adeyemi, shares her optimism on the economic outlook.
There are concerns, particularly around the political permutations leading up to 2023, but inflation, if it comes down as he has predicted, if the first subsidy is taken away, and if government does all that it has proposed to do according to the budget and according to the economic plan, there is reason to be optimistic.
With trade, ICT, transport, manufacturing, and agricultural sectors expected to drive growth in 2022, hopefully this engagement should be a reference point in the days to come. Will Ibong, Channels Television News.
And Nigeria imported capital cumulatively worth $4.51 billion between January and September 2021, representing a 47.6% decline compared to $8.6 billion recorded in the same period of 2020. According to the capital importation report for the third quarter of 2021, recently released by the National Bureau of Statistics, the total value of capital importation into Nigeria in the third quarter of 2021 stood at about $1.73 billion, million dollars from 875.62 in the preceding quarter of 2021, and this shows an increase of over 97%. Well, we have Babajide Atolagbe, a treasury analyst at AfriInvest Asset Management Limited, joining us on the show now to tell us what he understands and what the implication of these figures are to the Nigerian economy. Good to speak with you, Babajide. Good morning. So foreign portfolio investment contributed the largest amount to capital inflows, accounting for $4.31 billion, and that's over 70% of the total capital importation. Is this mostly equities, or is it more than equities?
No, not really equities. So the breakdown of the numbers actually show that equities accounted for less than 5% of the total value. And this has been the trend for the last couple of years because Nigeria has a lot of structural challenges, which was further heightened by the pandemic. And speaking of high inflation, FX scarcity, policy inconsistency, and insecurity issues, among many others. And typically, what we know is that investors like to shy away from asset classes that exposes them to domestic and structural risk. Also, the equities market does not really have the liquidity requirement, to encourage FPIs to participate in that space. And even the local investors, such as PFAs and asset managers, they don't really throw their weight in the equities market simply because of the inherent risk. So you don't really expect to see a lot of traction going into that space from foreign investors. And going forward, we expect this to persist simply because the pool side factors are still are still in the corner. We need to create an enabling environment for businesses to thrive. And if we are able to iron that part, probably going forward, we might begin to see some sort of traction in the equity space. But on the other side, we saw that 65% of the flows went into the money market space, and that simply tells us that investors prefer to play in a space that is that guarantees their capital and offers some sort of decent yield.
Okay, so should we be worried? I know we've had this conversation with some other people, like you mentioned, just about 5% of equities accounts for this huge number from the foreign portfolio. And so we have more of local players there. And of course, it does have its advantages. But should we be worried, or should we just relax and try to get more local players into the equities and let the foreign portfolio go to the other investments?
I think we should have a mix of both local investor and foreign investors, simply because it gives us some sort of liquidity, and it simply tells us that Nigerian companies are actually worth investing in. So over the years, local players are not even throwing their weight in that space, because if you look at the PFA allocation equities, you will see that it is barely above 6%. And compared to what they are investing in other fixed income instruments. So I think for us to have a dynamic market that contains both local and foreign investors, we need to set our structural problems right. We need to make sure that our economy is worth investing in, and all these structural challenges are put in the corner so that funds can begin to flow both locally and internationally.
Okay, so you earlier mentioned making the environment conducive, and now you talked about structural challenges. Being specific now, what are some of those things you think should be amended or put in place to boost investments in this area?
Practically for equities, from our observation, one of the major areas that we can tackle to attract flows is policy, inconsistency. Investors want to be sure that when they are bringing in their money into Nigeria, their capital is being preserved, and also when they want to exit the market, they are able to see enough liquidity to get their money out as at when due. So if we can be a little bit consistent with our policies, and also tackle the issue of inflation, all those structural issues ranging from transportation, insecurities, and a couple of others, if we're able to put all of that into place, we could see foreign flows actually come into Nigeria equity space. And of course, it will also encourage local players, asset managers, pension guys, and even the insurance guys to throw their weight in the equity space.
All right. So in the report, there are other investment with just 22.7%. Could you explain to us what these other investments are, and how we can? Is it possible to increase this 22% at least to something appreciable?
So other investment are not financial, not capital wise, in terms of not equity, not bond, and not money market. But on the flip side, we having just 22.7% allocated to just other investments is not actually safe, because if you look at the numbers, about 65% goes to money markets. And the downside risk to that is that this exposes the economy and the capital market at large to external shocks and volatility. I think where Nigeria should be more, focused on is FDI, which is foreign direct investment. Foreign direct investment is not, unlike FPI. Unlike FDI, FPI is easy to liquidate and usually short-term flow. FDI would actually impact the broader economy, because this is basically investors bringing in their money into Nigeria and investing in capital projects such as transportation, healthcare, and a couple of others. And if you notice, this type of investment are what we need, because they will actually create more jobs for Nigerians, in our economic output, and also bring about economic stability. And if you've observed that this FDI has been the major driving chances for other African economies like Ghana and South Africa. If Nigeria can actually, set their local priorities right, and create an enabling business environment, we're likely going to attract FDI, and that will also drive our economic stability going forward.
And still looking at the report, we see that Lagos once again ranked the top destination of capital investment, as importation was up by 97% first for the third quarter of 2021. Well, we do know that Lagos is the commercial capital of Nigeria, but what lessons can other states learn from Lagos, to also up their game in this area?
Frankly speaking, I don't think Lagos is doing anything or has done anything extraordinary to attract capital investment, aside from the fact that it is the commercial capital of Lagos, of Nigeria, I beg your pardon, and is headquartered to major institutions. Naturally, it is just bound to have more flows. But if you take out all of these natural advantages away from Lagos, you will find out that Lagos is just like almost every other state. So what I'm just trying to say is that many states are alike. Nigerians and states are not doing so much to actually attract investment. But the message here is that stakeholders, both at the federal and at the state level, even at the grassroots level, they need to actually wake up and start taking conscious measures to bridge the country's infrastructure gap, invest heavily in human capacity development, and also keep insecurity issue at bay. I mean, these are the major tickets to actually attracting capital flows into any developing economy. And if you've observed in the last 3 to 5 years, you've seen a lot of funds flying across the globe to invest in startups in tech, in healthcare, in transportation, and a couple of others. So if Nigeria is actually ready, we can actually prove to the world that we are a reliable destination to these funds, if we can actually reduce our country risk premium in the short to mid term.
Yeah, when you mention all those tech startups and all that, I mean, like we always say, Nigeria has the potential, but I guess the thing is getting our hands into the soil and getting the job done so that we will see the results. But would you say Nigeria is optimizing the opportunities? I mean, Africa is like the largest market now, greenfield, untapped resources everywhere. Would you say that we are intentionally working towards maximizing some of these opportunities?
I wouldn't say we are optimizing it in the best possible way, because Nigeria has the human capital. You have our population is filled with young guys who are actually ready to actually learn. We've seen Nigerian young guys thriving in different sectors when they leave this country. So I wouldn't say we are really leveraging on our resources to actually attract this capital and also put ourselves on a good pedestal. I think we are overly concerned about political issues and some sort of nationalization issues. You take, for example, look at the OPE event that happened just in 2020. OPE was a business that was already thriving, and it was really helping Nigerian commuters in the transportation sector. But simply because of the ban and the ban that came from the Lagos state government, you could see how that investment was basically dumped. All the resources that were put into that investment were completely nowhere to be found. So I think the government also needs to take up the task and also make sure that they encourage foreign investors that when you come and invest in Nigeria's human capital space, which is basically leveraging our youth population, we are going to provide you with some sort of comfort and shield you from all sorts of political instability. So if the government can actually assure investors that, okay, if you bring in your funds, we'll make sure that you're not exposed to a number of risks. This will actually go a long way in attracting investors from different areas of the world.
All right. And how do you see the 7% inflation rate in the United States affecting Nigeria's financial markets?
Typically, we don't expect to see a direct impact on the other market generally because the US market and the Nigerian local capital market are not priced in a similar manner. However, we expect that the Nigerian's Eurobond market, which is dollar denominated, is going to take a material tanking on the back of rising inflation because the Fed has actually signaled that benchmark rates are going to be hiked in the US. And obviously, the implication is that we expect global yields to rise and therefore driving prices lower. And if you've been following the Eurobond market lately, you see that has actually played out in that space. Yields have risen, materially, and prices are dropping significantly. But indirectly for the local market, I feel that if rates are jacked up in the developed market, the CBN may be tempted to actually raise benchmark rate locally to actually retain and attract foreign capital. And that might, to some extent, indirectly push yields in the fixed income space higher and definitely pressure local equity valuations.
So from your eyes now, MPC is coming up soon, I think on the 24th or so. What do you see? What decision do you see?
It's still a little bit unclear because we know that the CBN decision is based on a number of factors, and one of it being macroeconomic indicators, looking at GDP numbers, unemployment, and a couple of other macroeconomic indicators. Firstly, we need to understand the fact that the reason why interest rates was actually jacked lower in 2020 was because the economy was dwindling from the impact of the pandemic. And the CBN had to actually put some sort of caution to support the economy. So the big question is: is the Nigerian economy now stable enough? And is it back to pre-pandemic levels to the extent that CBN will be able to actually, take away the support in terms of by hiking interest rates? And secondly, we've observed that over the years, Nigeria seems to follow, this decision that other emerging markets like Turkey, Brazil, Russia, and a couple of others follow in terms of monetary policy rate. So if at the global space we see rates rise significantly in 2022, the CBN will be forced, or let me say, will be encouraged to actually raise rates in order to retain capital and also make sure that this little foreign capital importation we are addressing about is not completely wiped off.
And so share with us your outlook for 2022 when we look at the markets.
So for the market generally, it's going to be it's most likely going to be a tough year simply because of policy normalization across the developed market. But in terms of strategy, I would advise investors out there to make sure that they are highly diversified across and within different asset classes. That way, if you are being exposed to higher interest rates in the bond market, you still have some sort of cushion either from investing in alternatives or investing in equity space. Also, cash has always been king and will forever be king. So it's always advisable that you have a significant portion of your portfolio in cash so that you're able to take advantage of any opportunity that come up within the year. And lastly, we expect that for those who will be playing significantly in the fixed income space, most of the activities should be centered around the short end of the curve, simply because whenever there's policy normalization, we usually see rates yield drive higher on the long end of the curve. And basically, we should also look at investing in corporates because corporates are much more stable and they don't tend to be as volatile as sovereign instrument when compared to sovereign instrument. I beg your pardon.
All right. Thank you so much, Babajide Atolagbe, Treasury Analyst at Afrinvest Asset Management Limited. Thank you so much for sharing your thoughts with us and your perspective. Enjoy the rest of the day and, in fact, have a great weekend. So after the break, how can Nigeria, tagged the giant of Africa, maximize its potentials on the continent? Well, you'll find out right here on Business Morning here on Channels Television, but that'll be after the break. welcome back. Well, with the world's largest free trade area and a 1.2 billion person market, the African continent presents a large-scale untapped potential. And Nigeria, with the largest population, stands to gain from this market. But if the right strategy is adopted. We have Professor of International Economic Relations at the Covenant University. He's also consultant with the Economic Community of West African States, ECOWAS. Professor Jonathan Aremu joining us from our Abuja studio to tell us if Nigeria is on the path of maximizing this market. Good morning, Prof.
Good morning, and good morning, viewers.
So, I mean, Nigeria is the giant of Africa. From your perspective, are we still the giant of Africa?
Yes, we are.
Okay.
We are.
Is it just in our population, or what else? What else gives us this flag of being the giant of Africa?
Well, it's not in our population or the effective workforce, but right from the beginning of Africa as a continent, the contribution of Nigeria has been very, very massive. Our Prime Minister contributed a lot, and in fact, his camp was responsible for actually defining the path which Organization of African Unity should actually follow, and that one led to the emergence of OAU in 1963. There are three camps, but the camp of our former Prime Minister, His Excellency Tafawa Balewa, his own camp led to what the entire Africa actually take as the route to African integration. Not only that, you just mentioned that we are having African Continental Free Trade Area. Right from the beginning of the process, from the Abuja, from the Lagos Plan of Action in 1980, that was Lagos. Then 1991, African Economic Community Treaty concluded in Nigeria. And when you look at what happened even yesterday at the Pan-African Payment and Settlement System in Ghana, you can see the display which Nigeria actually show, not only in the presence, but our president was actually represented by the Minister of Industry, Trade and Investment.
All right, Prof.
And
I mean,
the governor of Central Bank
Prof,
is among the forefront.
Yeah, so these are applaudable, but I mean, we have this 1.2 billion person market on the continent. How much of this can Nigeria lay claim to?
Yes, currently it is low. I mean, everybody knows that. And it's not only low for Nigeria, it's low for entire intra-African trade. In fact, Nigeria even performed better under both ECOWAS trade liberalization between the 15 member states and even into entire African nation as well. But with African Continental Free Trade Area, with the kind of commitment Nigeria is putting into its own implementation of it, clearly Nigeria will lead Africa. It's quite clear.
Okay, but what have we done? Because mostly when I speak to manufacturers or individuals who are supposed to be active in the AFCFTA, it seems like we are still setting boundaries, we're still setting guidelines, we're still preparing, and we don't really have tangible, results from the AFCFTA. So where are we exactly?
Oh, my sister, we have really gone far. The president set up the National Action Committee even before we ratified on the 5th of December 2020, and the National Action Committee have been working quite well with a lot of work streams in different sectors of the economy. And not only that, they prepare the plan for the economy, which we are going to follow in the implementation of African Continental Free Trade Area. This plan was equally reviewed by United Nations Economic Commission for Africa, and UNECA is equally cooperating to make sure that what NAC has prepared is looking to make sure that the trading by Nigeria into AFTA will be very beneficial to the country. Let me say this one, that right now, Nigeria is ahead in quite a lot of trading services. What is actually necessary is to be able to give enough sensitization to the operators in the trading services. On the trading in goods, as you rightly said, the Manufacturing Association of Nigeria, their main concern is that the present infrastructure appears to be relatively deficient to give us a very good and competitive environment that we allow to penetrate with our goods into other countries. And I think government is looking into that area. But seriously speaking, just as you said, much has to be done, and manufacturer association, they are being given opportunity to express and monitor the development as well.
Okay, so like you mentioned earlier about the payment system, that kind of remains a challenge on the continent. So sometimes it is even more expensive for you to place a call across, to African nation. It's more expensive compared to if you were calling outside Africa, or even making payments. How are we on the path of solving these problems to make it easier, for trade and transactions?
Excellent, excellent. That was exactly what was resolved yesterday in Accra. What is a payment system? Me in Nigeria, I want to buy something in Accra. Under the settings which we are used to up to today, it's a situation in which two ways. Either I go to Bureau de change my money from Naira to dollar. And when I enter Ghana, I change it back to CD to be able to buy what I wanted to buy and come and sell in Nigeria. If I want to go through the letter of credit, then I have to go through either dollar, pounds, or euro to be able to sell to other African countries. All these one exert substantial costs on import and export. But with the payment system, there's going to be a networking of the central banks in the entire Africa. And that is exactly what Afrexim have done. And they have used West African Monetary Zone, which is the Anglo-speaking of the ECOWAS, to be able to test run and make sure that this particular Pan-African payment system is going to be very effective. And what have they done? They told us yesterday that they have been able to trade between African countries with a Pan-African payment system, so that me, when I'm exporting any product, let's say to Senegal, right? The Senegalese will only be debited in CFA franc. And when I'm being paid, I'll be paid in Naira. And then the rest is left to the interconnection of the central bank of the countries involved. So that there's no need to be able to reduce our external reserve by when trading among ourselves. When trading among ourselves, we are not going to be touching our external reserve in terms of dollar, in terms of pound, in terms of euro, but we are making use of our own domestic currency. When I'm buying, I pay my domestic currency. When they are selling to me, when they are paying to the other person, they're going to receive the money in its own domestic currency. And that is it. It's going to be simple.
Well, sounds impressive, but does that replace the idea of having the eco-currency? Are we no longer working on that?
That is a very good question as well. You see, I've always said that economic union, which is the final stage of economic integration, essentially economic integration, there are in 4 phases. Phase 1, free trade area. Phase 2, custom union. Phase 3, common market. Phase 4, economic union. It is in the final stage of economic union that the issue of single currency comes up. But even in ECOWAS, there have been a serious mistake. And what was the mistake? Even when we are in FTA, free trade area, we were saying we are going to put a single currency ECO. And that becomes very difficult because a lot of convergent criteria, both primary and secondary, become very difficult to fulfill. And therefore, in 2009, some of us recommended that why don't we go through ECOWAS payment and settlement system? And as I'm talking to you now, ECOWAS is finalizing its own ECOWAS payment and settlement system, so as to make sure that trading among ourselves will not involve any intervening international currencies like dollar and pound sterling, but direct payment and receipt in our domestic currency. And that is exactly the same thing which Afrexim brought on board for the entire African nations. So it's going to be very easy. We are not saying, because one, I think is representative of the president of Uganda, said that when are we going to have single currency? To me, single currency, we can go ahead until it is possible to have it, but we shouldn't force it. Because the possibility of forcing convergent criteria, you have to maintain this level, you have to do this. It's going to be difficult. And it has been difficult since the many years which ECOWAS has embarked on it. And let me say this one. Just about a year and a half ago, what happened to the entire Africa was that the president of France came to Cote d'Ivoire and then announced that ECO will be realigned to Euro. That is not the way we want to do it. So ECOWAS has reverted now that we are going ahead with our own ECOWAS payment and settlement system, and it is on the road of ECOWAS payment and settlement system we are going to arrive at ECO. So the idea of ECO is still intact, but we are not rushing into it anymore.
All right, from the Nigerian side especially, there's the issue of regulatory agencies. Sometimes exporters have complained that they're rather much and the procedure is bureaucratic and cumbersome. Is this also being looked at to make it easier for people to get interested in moving goods across the borders?
Thank you very much. Thank you. Under African Continental Free Trade Area, each of the domestic economy, I'm calling them state parties, is going to ensure that the domestic regulation will not be punitive to intra-African trade. And look at it. Yesterday, the governor of Central Bank was physically present there and acknowledged as one of the frontline governors that is allowing this dream to happen. So which means Nigeria is fully prepared. But we have to come back home to be able to make sure that the regulatory environment is compliant with what we actually signed under the principle of Pacta Sunt Servanda in international treaty. So we expect that each of the ministries, departments, and agencies in the government, and they are doing that because I'm aware of it, they are putting together what they need to do to be able to make sure that all of these little problems and infractions which we are facing in trading among ourselves will be put to things of the past.
So is there
a lot of work is going on.
Okay.
And the national strategy is coming up very soon.
Okay, we'll be looking forward to it. Of course, beyond the strategy and the paperwork, we'd like to see it really actually come to pass. But let me just ask this, Prof, before we let you go. Countries are supposed to trade in the areas of their comparative advantage. And we know that sometimes this comparative advantage, it clashes between countries. Is there a way to, take care of competition, or are we going to allow the countries to compete among themselves, or we're going to say, okay, you face this and this is your strongest area of strength and you face this?
Thank you. That's a very wonderful question. That means, one, that with the opening, with the liberalization of trading in goods and services, clearly there's going to be competition in trading in goods, in trading in services. And as you rightly said, countries do better when they pay attention to the area where they are better. That is comparative advantage principle. And then also, part and parcel of this area where they can compete, which means competitive advantage. So not only comparative, but competitive advantages. And that is one of the things which the organized private sectors are saying, that we are not competitive. Though we may have comparative advantage with what nature has given to us, with human capital we have, but the infrastructural deficiency will be a problem. And I think that is being addressed. So, in terms of comparative advantage, Nigeria, we are quite better. I've gone to quite a lot of African countries, and you can see Nigerian companies, Nigerian banks. You go to West Africa also, you can see a lot of things we Nigerians are doing. And let me say this one, under the African Continental Free Trade Area, for some of us that participate in a lot of sensitization on it, I can see the ambition of Nigeria, eager to be able to go into this thing, ready to be able to embrace going into African countries. So I believe that we are going to do well. Let me say one thing, which is very important. In some areas, like trading in services, which is not very much known, we are familiar with import duty, export duty on goods, but services area is not yet known. And that is another area where more sensitization will have to be put. For subsidy to cross-border, there are essentially 4 modes, mode 1, mode 2, mode 3, mode 4. Subsidy can cross-border on internet. It can cross-border. I can export a product to another African country under tourism. When a tourist comes to Nigeria to come and consume what I have, that is an export. But the third one is a situation in which we have commercial presence, in which we have Nigerian companies having affiliates in African countries. And then the last one is mode 4. In each of these 4 modes, Nigeria, we have a lot of comparative and competitive advantages. And therefore, what we need to know is to sink down the sensitization so that Nigeria can be well off on the African continental free trade area. I think Nigeria stands to be the best, and just as Shurali said, we are going to be giant of Africa under this African continental free trade area.
We certainly look forward to being the giant of Africa. It's a thing of pride, you know, and we look forward to it. Well, thank you so much, Prof. Thank you so much, Professor Jonathan Aremu, Professor of International Economic Relations and consultant at ECOWAS, for sharing your thoughts with us and giving us a very bright future there. We're looking forward to that future.
Thank you.
All right, so now let's do an opening call to the market. I don't know if it's that bright in the market. I think it was bright yesterday, but Will has the details. Hello, Will.
Hey, good morning, Ini. Like you rightly said, the market wasn't so bright at the local bourse yesterday. It traded with mixed sentiments, though. It was like so, you know, it's like the Goldilocks effect. It wasn't so hot, not so cold, just down 0.01% yesterday. That's like 1 basis point knocked off the market value of the all-share index, and it's left still at the 44,000 level. There, 44,604.74 points to be precise, and the market cap is still at the 24 trillion naira mark. And the year-to-date game, we've seen that it's now, you know, it remained unchanged at 4.4%. We've seen that total volume of transactions, there was a spike in volume compared to Wednesday and Tuesday. We saw 321.75 million units of trade, stocks transacted yesterday, valued. We saw a downtrend in that 3.66 billion naira compared to what we had in the previous sessions, and deals with over 4,500 deals there. And we'll move on to the sectors where we saw the banking index up yesterday. Consumer goods was up 0.16%. Well, this is despite the fact that Honeywell Flour and Unilever were down yesterday, but that didn't affect the counter. Industrial goods closed fast. Industrial and oil and gas were flat yesterday. Insurance was, well, negative. Well, what can we say about the insurance sector? We're just hoping that we understand what the metrics is. When other sectors are up, they're down, it's like we need to just follow them up and see how that works. Now, the NASD market, we see that it was 0.39%. They had a rebound compared to what the downtick they had in the previous session. Market cap now at 633.52 billion naira. And volume of transactions, we saw a little bit compared, there's an uptick. There was an uptick compared to the previous session. Value 9.25 million units of shares were transacted yesterday, and all in 11 deals. Now, at the fixed income market, we see that the bond market closed on a mixed note yesterday. There were quite mixed sentiments. There was much, well, we saw demand. The focus was because of the OMO auction that took place on Thursday, so probably investors were focused on that. And we saw that there was a little bit of, you know, the sell-offs on the 2028 paper for the February 2028. But demand was there for it because it matured yesterday, and there was sell-off on the 2036 paper as well, while there was mixed reaction for the 2050 and 2049 paper. But to tell us what really went down the fixed income market, we have Caleb Alimi, fixed income dealer at FSDH Merchant Bank. Good morning, Caleb. Caleb, are you there? I think we lost Caleb there, so we just move on and just see what's really happening. Like I was talking yesterday, the NTB auction, like we had an NTB auction on Wednesday, and that, well, the results are out, but there was an uptick in the 1-year paper for the NTB auction. Okay, I think we have Caleb there. Caleb, are you back?
Yes, I'm here. Good morning.
Oh, good morning, Caleb. I was just talking about what happened at the NTB auction, the 1-year uptick, the 1-year paper that saw an uptick yesterday compared to what we saw last year. Is this a reversal of the trend where we saw downticks in the 1-year paper for the stop rates?
Yes, it's something we expect. It's a new year. It's a new borrowing plan. Investors are actually demanding higher rates from the federal government. We could tell from the range of bids for the last auction in December and the first auction in January. The last auction in December, the range of bids was from 4.39 to 6.99. Was from 4.39 to 6.99. But this time, the range of bids moved higher from 4.6 to up to 7.69. And we already see that investors, are asking for higher rates given the new borrowing plan of the federal government. We expect that to continue into the year, actually. But we'd like to see how the, borrowing agency, the Debt Management Office actually reacts to investors' quest for higher yields.
Okay, so the bond auction calendar, long awaited, has come out for the first quarter. It has been released, and we see that it's got a new issuance. Talk to us about that.
Yes, so there's a new issuance for a new 20-year paper. The government has always shown the desire or the preference to actually go at the long end, and so there's a new issuance for a 2042 paper, a new 20-year paper. In general, the government will be looking to borrow about 420 to 480 billion in this quarter, with 150 billion on offer every month. With the 2042 paper, 75 billion of that, and on the short end, the 2026 paper, 75 billion of that. We expect to see them actually show their preference for the longer term paper as being their strategy over time. So we'll see push more investors towards the long end of the curve at the 2042 paper.
Okay, so thank you, Caleb, for that insight, and we look forward to how that transaction will play out in this new year and how investors will be reacting to it. So, Ini, that's what we have for the markets.
Thank you so much, Will. Of course, next week is another week, and we'll follow the market again. Follow the money, that is.
We'll definitely follow the money.
Yeah.
I like that.
All right, then. Thank you so much, Will. Well, we'll take a break now. When we come back, we'll do an opening call to London. It's Business Morning on Channels Television. You're welcome back. Well, after a lot of pleas, residents in England have shorter stay in self-isolation. Well, we have Juliana joining us from our London studios now to give us the details. Hello, Juliana. Good morning.
Well, maybe they're using it already, Javid, if you said...
Hello, Juliana. Juliana, can you hear me? All right, I guess we're having a bit of a technical issue with Juliana there. So Laddie is standing by. He's always ready. And I made a prediction yesterday,
yes,
Laddie. It must.
Your crystal ball.
Laddie, it must. My prophecy must.
But are you sure you really checked your crystal ball?
Underline or circle the must.
Anyway,
must come true, Laddie.
I'm so sorry you were wrong. It's a red market. It's a red Friday.
Take it, Laddie. I would take it.
No, Ini, you just have to accept it. You lost this one. Maybe next time. Better luck next time, Ini.
Okay, all right.
All right, look at the market cap now. It's still sitting above the $2 trillion mark. It's down about 1.14%, but still above 2 trillion, which is good. 24-hour volume traded in the total crypto market, $103.20 billion traded. Bitcoin dominance there, 39.54%. It is below the 40% range at this morning. And price of Bitcoin did get above the 44,000 level, but now it's seen a correction there down to $42,853. It's down about 1.94%, and that took a couple of altcoins down with it, but some are still staying quite stable. The likes of Phantom. Phantom's doing well, still staying at $3. 24-hour volume traded in Bitcoin, $42.12 billion. And we see Ethereum still sitting pretty above $3,000, $3,296. It's down 1.41%, and volume traded $15.31 billion. Top alls by market cap, it's kind of mixed this morning. We see BNB there in the green, marginally though by 0.46%. Cardano, $1.29, up about 0.08%. And the down is there. We see Solana and XRP. XRP is still struggling to get to that 80 cent range. It's down by 1.09%. So right about now, for the first time, I'm going to be having, on this segment, for the first time, I'm going to be having my guest right here joining me live on the studio. Great to have you, Deborah. Come on in, Deborah.
Hi, Laddie.
Good morning. Great to have you. You're a crypto entrepreneur, but I know you're busy with your project. But tell me, what do you think about Bitcoin price movement this morning?
First of all, thank you, Laddie, for having me here. And for the record, it's my first time on live TV anyways.
Fantastic.
Okay, so I'll just set a bit of context for diving in. Right. So when inflation increases, right, it means that money depreciates in value, right? The value of money depreciates, and which also means that digital currencies like Bitcoin, Ethereum, and the rest will remain in the headlines.
Right.
However, there are growing concerns around the impending regulations, and coupled with the era of interest rate hike as we have it now, which would most likely also dampen investor sentiments in the crypto market. But then again, you can't take away the fact that Bitcoin has gained mainstream attention, right?
Exactly,
and
yeah.
as we have it now, investors might tend to, move towards assets or investing in assets that increase in value, like Bitcoin, Ethereum, and the rest. And as we have it now, and also based on your analysis, the crypto market is sometimes volatile.
Highly volatile.
Yeah, it's sometimes stable. But then again, as all of these factors come into play in influencing investor sentiments in the crypto market, you see that a lot of investors tend to, like I said, invest in crypto assets or digital assets that increase in value in a bid to hedge against inflation risks, as opposed to just opposed to just losing the value of your savings to inflation. But I mean, what I always say out there is, to crypto enthusiasts, to investors out there, just stay safe out there. Do your own research. That would go a long way in understanding, what are the financial implications, what are the economic factors surrounding the prices, and that helps a great deal as well.
Do your own research.
Do your own research.
Very important. I'm sure they want to hear you. You tell them. Tell them.
Do your own research.
Do your own research. All right, let's talk about NFTs now. I know that's your space. You produce, you have a marketplace, where people can sell and buy NFTs. But now, tell me about NFTs in Nigeria. What's the demand like? Is it are Nigerians buying NFTs, or buying Nigerian NFTs, or is it foreigners that are buying it? What's happening there?
Okay, so about NFTs, I think the growing use case of NFTs right now, I mean, in sectors, it's sort of creating interest in various sectors in the economy. We can see key leaders in arts, fashion, education, and even the real estate sectors delving into NFTs, taking advantage, and also leveraging the opportunities that exist on the blockchain through NFTs, especially as we journey to the metaverse. So I think that has sort of also brought in attention from foreign and local investors into the NFT space. And I think it's going to be an interesting year for the blockchain ecosystem at large, especially, and it's exciting to see, more industries getting on board.
Right. And I also heard that, NFTs right now, once you buy an NFT, sometimes you might not find a buyer. Because you buy an NFT and you're hoping, at some point I'll be able to sell it for $1 gazillion. So what happens if you can't find a buyer?
I mean, so it all depends. I mean, that's why you also make your choice of what marketplaces to use, what NFTs to ape into, and all of that. Yeah,
All right, Deborah Ojemode, thank you so much. CEO Afen Blockchain, thank you for gracing us with your presence on the show.
Thank you for having me, Ladi.
Thank you for watching us there. So, Ini, right now, though you missed your bet, better luck next time, Ini.
I guess I'll just follow the market closely, and I'll follow your advice.
Yeah, maybe shine your crystal ball a little more.
Nah, I'll leave the crystal ball, and then I'll do more research. I think I'll follow Deborah's advice there and just stay safe. Thank you so much, Deborah, for coming, and thank you, Ladi, for updates on the markets. I think we have Juliana just before we wrap up the show, joining us now to tell us the reduction in the self-isolation period in England. Hello, Juliana. Good morning. So tell us about this. We've been clamoring, or you guys have been calling for it, and now you have it.
Absolutely. Just very quickly, yesterday we discussed it, didn't we? The CBI, they issued a statement saying that vast majority of their members were complaining because 10 to 15% of the workforce were absent. They were hammering on the government to make this isolation cut, this reduction, which they've done yesterday. It was announced in the House of Commons. So now the self-isolation, if you are double vaccinated, will be from 7 to 5 days. But I think more importantly, Inni, we have had GDP numbers out today showing that the UK economy is now back to pre-pandemic levels. Hopefully I can update you more during the afternoon.
Certainly we'll do more of that during Business Incorporated. Thank you so much, Juliana, and talk to you later.
Thank you.
So from London, we say thank you so much for being a part of the show, from Juliana and from here for the week. Thank you so much. It's been an interesting week. It will be more interesting next week. So do join us on Business Morning every 10 a.m. Monday to Friday. But don't forget to join us at 1:30. Business Incorporated will give you updates from the world of business. I'm Ini John Mekwa. Do enjoy your weekend.